Let's turn now to the day's business news and a stock market debut in Hong Kong that went ahead despite the ongoing protests there is gaining a lot of attention. Here to tell us more is our business editor, Stephen Carroll. Stephen.
Eve, this is the Chinese e-commerce giant Alibaba. They've raised $11 billion by listing their shares in Hong Kong. The move, a boost for the city and for its stock exchange in the midst of the ongoing crisis there. Now, Alibaba has been traded on the New York Stock Exchange for 5 years, but opted for a second listing in Hong Kong after market rules there were changed. Shares have jumped by over 6% on their first day's trading. Lauren Berstecker has the details.
Returning home despite the unrest, Alibaba saw its shares surge on Tuesday following its triumphant launch on the Hong Kong Stock Exchange. It was largely seen as a vote of confidence in Hong Kong's future as a regional financial hub, at a time where the city's economy has been thrown into recession by months of increasingly violent protests.
I'm very thankful that Alibaba, after 5 years of traveling afar, finally came home. Despite the difficulties, despite the challenges that we are going through here in Hong Kong.
In 2013, plans for an Alibaba listing in Hong Kong broke down due to clashes over the city's financial regulations. The company ended up listing in New York instead, in a world record $25 billion offering. Hong Kong has since tweaked its rules to allow double listings, and with Beijing pushing for big Chinese tech firms to trade closer to home, the stage was set for Alibaba to return.
Because of the innovation in Hong Kong in the past few years and the reform of Hong Kong's capital market, we managed to finish what we started 5 years ago.
Often described as the Chinese answer to Amazon, e-commerce giant Alibaba has, over the past 20 years, become Asia's most valuable company. The group managed to raise $11 billion in its Hong Kong IPO, dwarfing the $8 billion raised by Uber earlier this year.
Let's take a look at what's happening on the stock markets for you now. European shares starting the day pretty flat. Travel companies among the main fallers. London, Paris and Frankfurt all tipping into the red in the first few minutes of trading. I should say. News from China that officials have agreed to fresh talks with Washington on a preliminary deal to end the trade war, not having much effect in trading today. In Asia earlier, a mixed picture. So the shares in Alibaba up 6.6% a short time ago in Hong Kong. Not enough, though, to boost the Hang Seng into positive territory. Tokyo and Shanghai, the only Asian markets, seeing some small gains in trading today. Well, moving on, the chief executive of Australia's WESTPAC bank is to resign after accusations the lender committed 23 million breaches of anti-money laundering laws. The Australian financial crime regulator is pursuing WESTPAC for failing to report millions of international money transfers, including payments linked to alleged child exploitation in Southeast Asia. WESTPAC's CEO, Brian Hartzer, said he accepted he was ultimately responsible for everything that happens at the bank. He'll step down on December 2nd with a full year's pay. The Australian government has welcomed the move.
That the government believes those alleged breaches against WESTPAC were the most serious in both nature and number. And there needed to be accountability, and we have seen today the bank remove its CEO immediately and take steps to bring forward the departure of its chairman. And now the people of Australia, the customers of WESTPAC, will be looking to that company to ensure an improved performance going forward.
Google has sacked 4 workers who were linked to efforts to organise a workers' movement at the company. The New York Times says the 4 employees were fired for clear and repeated violations of the firm's data security policies. But a blog that was previously used to organise a walkout by Google workers says the 4 were targeted for taking a stand and organising for a better workplace. Finally for me, Poland's central bank has been doing some seasonal rearranging. It's moved 100 tonnes of gold back from the Bank of England, where it was being stored. That's worth over €4 billion at current prices. The National Bank of Poland says it's a bid to demonstrate the strength of the Polish economy. Poland's actually been stocking up on gold. It more than doubled its reserves by buying 125 tonnes in the past few years. So what it's moving to Poland is actually what it's only bought since the start of 2019. I didn't realise this, but many countries actually store their gold reserves at the Bank of England. In fact, they tend to spread them around, Eve, to make sure that it's not all in the one place, partly, of course, for security reasons.
Indeed. The problems I don't have, Stephen. Thanks a lot for that business